Are you better off buying Bitcoin or Ethereum? Where does the profitability lie? And are centralized exchanges dead? Today, we're going to discuss all of this and more in the video. On my display right now, I have the Ethereum Bitcoin chart open for good reason. And the reason why I want to look at this chart today and a few others relating specifically to how Bitcoin and Ethereum interact with one another is to show you that you can really define where your risk to reward ratio is depending on what asset you buy and how far along in the Bitcoin or the crypto cycle we are. And the reason that I say that is that if we look at the Ethereum Bitcoin chart, essentially what we're looking at here is Ethereum's valuation in relation to Bitcoin, not to the US dollar valuation, not Bitcoin's valuation against the dollar, not altcoins valuation against the dollar, specifically these two assets paired against one another. And the reason that we look at this is obviously because these are the two main assets that everyone knows about and that most people are very aware of when entering the cryptocurrency sphere. Now, if you were to buy Ethereum, let's say back here in May of 2021, so essentially 2 years ago, your profitability versus holding Bitcoin is essentially the same. You didn't outperform Bitcoin. Ethereum's valuation didn't crazily outrun Bitcoin's valuation, and Bitcoin didn't crazily outperform Ethereum. So essentially, your return is very similar holding either one of these assets. So if you were choosing between Bitcoin and Ethereum, you've essentially got the same return on your investment. Now, why this is important is it helps you define where you're comfortable placing your capital in the cycle. And the reason is that we follow narratives. Narratives are the most important thing when investing in crypto. Not the fundamentals of the token, not who's investing, not which whales are buying, which institutions are coming into the space. The most important thing is the narrative. Why? Because you're not investing, as most people like to say it, you're speculating. You're literally betting on an outcome based on a few different factors that you can contain in your mind and therefore have some sort of thesis or hypothesis at least, and then come out with a potential predictable outcome depending on sort of what variables you have. So depending on where the narrative is shifting in the market, that's exactly how altcoin cycles and Bitcoin cycles and Ethereum cycles operate. Depending where the narrative shifts, where the attention shifts, that's where the capital is going to flow as well. Now, over the past year, of course, there's been a huge shift in narrative to be primarily Bitcoin focused. We've got all of these ETFs coming or applications being put through, potential approval on the horizon. As you know, BlackRock's ETF approval rating or approval history is very, very high. I think 576 to 1 declining at this point. So if their Bitcoin ETF were to be declined, it would be very unlikely, at least at this point. And they are changing things. The SEC did send them some comments on their application. They are changing things up, I assume, to try and get approved. And if there's any fund or any institution that's likely to get approved for a Bitcoin ETF, that's probably going to be BlackRock, just based on their size, their influence, and how many assets they have under management. Now, this attention shifting towards Bitcoin has seen what? Well, we've seen a shift from capital flowing into Bitcoin. We can see that with the Bitcoin dominance chart. Now, Bitcoin dominance, if you aren't aware, you might have seen it on this channel before. It's essentially, again, how much of the overall cryptocurrency market cap is allocated specifically to Bitcoin. So currently it's at 51% or 51.7%. So 51.7% of all crypto or capital in the market right now is allocated to Bitcoin. And we've seen a huge run up in that from November last year to currently around a 30% gain in Bitcoin dominance, which means that pretty much every other asset in the cryptocurrency sphere, whether it's altcoins, whether it's Ethereum, has been losing value against Bitcoin because all attention, all eyes have been on Bitcoin because, of course, for the main reason that there's a lot of FUD around other assets. People are very afraid of investing in altcoins. Altcoins have been bleeding for the past year, 2 years, 2.5 years against pretty much everything else, including the US dollar, and very much so against Bitcoin. So a lot of the attention has been focused on Bitcoin, right? And we've seen this huge run up in dominance. And we're approaching key level in dominance now, which is the 52.1 level. And the reason being is, of course, this is prior back in 2019, where we did bounce and we had a huge run in Bitcoin up to the 73% level. Now, the reason that we're seeing this huge run, of course, is due to all of this, but we're also seeing a decline in Ethereum's value against Bitcoin. As you guys know, I'm a huge advocate for Ethereum. I think it's one of the most important assets that we have right now, besides, of course, Bitcoin. And Ethereum's value has been declining significantly against Bitcoin. Now, why is that? You'll see that I have this green line marked here on my chart. What date is this? Why is the date specific? Well, this date is when Ethereum switched from proof of work over to proof of stake, so the Ethereum merge, right? Leading up to that, we had a huge run up in Ethereum versus Bitcoin's value. So Ethereum gained, let's say, 70% versus Bitcoin prior to the merge and has been declining since. Why is that? Well, it's a shift of narrative. All attention, all eyes were on Ethereum previously, obviously because everyone believed that once Ethereum switches over to proof of stake, it'll be deflationary, it'll become ultrasound money. As you can see here, the Ethereum supply, if we were in proof of work, which is this yellow line, it's a simulated proof of work. So if we were still using proof of work, Ethereum's supply would be increasing. But as you can see, Ethereum supply is decreasing. So if we turn off simulate proof of work, you can see this is basically the break-even line, that line that you see at the top there. So if the Ethereum coming into circulation is equaling this Ethereum that's being burnt, used on fees, used on transactions, and so on, that would be equilibrium. But as you can see, it's significantly below that level, meaning that the Ethereum supply is decreasing on a daily basis. Now, lower supply, higher demand, obviously then price should go up, right? Because there's less Ethereum in circulation. And many people refer to this as some sort of a supply shock, or you might hear that phrase thrown around. But that's actually not true. What you still need to be looking at is narrative, attention. Where is the attention? We live in an attention economy, and it's the exact same thing for these assets. If the narrative and the eyes aren't focused on that asset, it's not going to go up in value because it doesn't increase or doesn't create this hype cycle of speculation where people are buying a ton of these assets because the attention is elsewhere. So even though Ethereum has been deflationary since that date, Ethereum has simply lost value against Bitcoin. So if you've been holding Ethereum since September last year up until currently, you've lost around 30% in value versus Bitcoin. That's a significant decline. You'd be better off holding Bitcoin, the largest asset, the one that potentially can't make you any money because it's already too big or it's already the largest market cap cryptocurrency. And that's not really always true. It's always going to be based on the narrative. So why am I telling you this? Why is this important? Well, you might have heard about all of the FUD around Binance right now. Obviously, you guys know FTX collapsed. We've had a lot of FUD. Maybe it wasn't even FUD, especially with the FTX collapse. That was very much true. FTX didn't have the funds. They were commingling user funds, and they were doing some sketchy stuff. Now, obviously, Binance is in the spotlight right now, being the largest centralized exchange in the world, and CZ, the CEO and founder of Binance, is obviously in that spotlight as well. And we're seeing a lot of this, that some of the key leaders and the chief executives of Binance are leaving amid this controversy and this crazy time. Now, does this mean that Binance is over and that something sketchy is going on? Not necessarily. Does it mean that there isn't? Also not necessarily. We have no idea as outsiders to know what's going on behind the scenes at these centralized exchanges. Now, this is an important thing because this is another shift in narrative that I've been speaking about. I made a tweet about this earlier today, about the next huge narrative could potentially be decentralized exchanges, DEXs, right? And all this fun and chaos that we're seeing with banks and centralized exchanges is fueling this fire. A perfect storm of decentralized exchanges to explode has been brewing and will continue to grow. And this is exactly what I've been saying, that if we follow the narrative, that's where you can follow the capital. And I've said this many, many times before. Of course, there are potentially some assets that you could be a maximalist about or religious about, something that you believe in, or you stand for, right? Like decentralization, like self-custody, like a censorship-resistant currency. These are all the things that Bitcoin stands for. Sure, if you stand for these things, that's great. I do as well. That's why I'm in this industry. That's why I invest in these assets. But if we're looking from a purely speculative standpoint to try and make money, which is exactly why you and I are here, we're looking to make a financial gain. That's the whole point of this industry. That's why there's so much attention comes into the space when there is the huge parabolic run, is because people are looking for a quick way to make a quick buck. So if you're here for that reason, sure, you can have your ideologies on the side, but if you're here to make money, these are the things you need to understand. You need to understand how to follow narratives and spot the narratives before they happen. So this is a narrative that I'm looking at right now, which is decentralized exchanges and tokens around decentralized exchanges. If you guys remember on this channel many, many years ago, when we were at the early stages of the bull run, I mentioned BNB, still currently at $233. Now, this is crazily valued compared to where we were when we first started speaking on this channel, which was around here when BNB was, let's go back, around $20 or so. So in 2020, $20. There we go. 5th of March 2020, right before the collapse, went all the way down to $9-10. I think on some exchanges it hit like $3 or $4. And we're still at, let's say, from $20 up 10x at $230, right? This is a centralized exchange token. Why? Firstly, there was speculation on this token, obviously with Binance Chain launching, all of these tokens launching on Binance Chain, people needing to speculate on these tokens and trade on these different exchanges. They needed the Binance coin or the BNB coin. Why? Because it gave you discounts on fees. It helped with a bunch of reasons, with a bunch of things on the exchange, and it facilitated a lot of transactions. So yes, there was a fundamental reason, but also people saw this parabolic rise and thought, holy cow, I can't miss this run, I need to buy in. And that's what causes an even more parabolic blow off top, is when people speculate, see other people speculating and want to get in before it's too late. That's what causes these parabolic rise, therefore a narrative push. So obviously with all of this FUD around centralized exchanges, we've seen a huge drip off in this token as well in recent months, with people trying to sell it and get out, because obviously there's a lot of FUD and a potential for it to go even lower. That's one of the benefits and the negatives of cryptocurrency in general, is that because everything's visible, because everything's public, everything's on chain, there's a lot of potential here for fear to spread like a wildfire. This is why one of the main reasons why Luna collapsed so quickly is because the collateral was visible on chain and people could see that collateral disappearing in front of their eyes. So they tried to get out before other people, front run and caused a bank run. That's very difficult in the traditional finance world, where a bank run is actually very difficult to occur, because there's a lot of obscurity that can happen in news and in traditional media with obscuring actually what's going on behind the scenes. But that's not really possible in the world of blockchain, because obviously everything is very public and very easy to see. So you have to be very, very aware of where these narratives are going. Now, with that all being said, I do think we are approaching an interesting point right now. If you look at Bitcoin, we're approaching a very, very key level again, which is the $31,500 level, 31,000, at least 30,500 to 31,500, and then 32,500. These are very, very key levels, breaking below a previous range that we could potentially enter into. So when we had the breakdown back in May of 2021, we bounced from this level that we're at right now, which potentially could lead to another rejection. But if we break through this, it does very clearly signal upside potential again back to the top of that range, which is the $37,000 region. So if we break up into here, that's very likely. But if we don't, it's highly likely that we will return to slightly lower levels for a bit more accumulation. Now, I don't believe that we're in a full-blown bull market yet. I do believe we have some more time for accumulation. And the reason that I say that is, generally, the highest risk to reward comes after the Bitcoin halving. Obviously, there's fundamental reasons for this. Like I've mentioned, you have to take into account everything fundamental, sentimental, as well as technical reasons for why we're in a bull run. As well as the overall narrative, right? So if we do get declined here or rejected, there's very likely opportunity that you'll get some more chances to accumulate at slightly lower levels, but not necessarily to the lows that we had before. Although as we do enter Q3 and Q4 of this year, there's a higher likelihood, or at least more recession risk. Obviously, you guys know I've mentioned this many times on the channel. If you haven't yet, go watch my recession videos where I speak about how the effects of a recession don't necessarily show up immediately. They're usually delayed by 12 to 18 months after the initial collapse, or at least the initial FUD. So there is some time here where we could potentially see even increased risk further or later on in this year, which is actually very similar to what we had in 2019, if I remember correctly. We did have a run-up, breakdown, some accumulation again, and an opportunity to buy in lower. Not necessarily at the same lows that we had before. And then of course we had the whole zombie virus thing that came into play and screwed a lot of people up. But it gave us insane opportunities in 2020 as well. So not saying that we have another crazy something that takes over the world. Maybe it's aliens this time. Maybe it's who knows what. But whatever it is, I think there's potential for new opportunities here for you to accumulate before the big boys like BlackRock come in. And I do believe that, as I've mentioned in previous videos, that they've been accumulating and they'll probably continue to accumulate if they are pushing for a spot ETF, which to some extent legitimizes Bitcoin and makes paper trading of it possible, makes it easier for larger institutions to come into the space, more individuals to come into the space, and just sort of gives it some sort of legitimacy to the normie world or the general public. I think we could see a lot of capital flow into crypto at that point. But overall, I think there's an opportunity here that we either get rejected from the $31,500 level again and go back down. Of course, it is a Friday, so it means that we're entering a low liquidity part of the week again. The weekend's low liquidity. small trades move the market quite significantly. So we could see either a breakup into that range or a potential breakdown, depending on where we're at or where we close the Friday out. I hope you guys enjoyed that video. If you found any of this information useful, please don't forget to give it a thumbs up, hit the like button, comment down below about anything you found in this video, or if you have any questions, and I'll answer them in the future videos. And if you want to see some of these altcoin videos or some of the things that I'm looking at based on new narratives, also comment down below. As always, I shall see you in the next video. Cheers.